If you open your chart right now and mark all the textbook pin bars, you'll find that most of them fail. This is the first wall you hit when you start learning how to trade. You're taught that candlestick patterns are the bridge between you and $1 million only to see the dream shatter like glass. The missing piece, context. The pin bar, you know what to look for, but you're still missing the where. There are three tenets before every trade: when, the where, and the what. Candlestick patterns and chart patterns, you have the what, but don't know where and when. The where is the most important part. We call these wheres the areas of interest. These are the places where you want to look for trades. Everything else becomes noise to you. Today, we'll talk about the first areas of interest called time maps. We call this a time map because unlike trend lines or support resistance lines, the time doesn't lie. And it is the simplest one because it's subjective. Why do we use time? Why previous day high or weekly low? Because these are the hardest points to define. If you're a massive institution trying to fill $1 billion buy order, you cannot just click buy in the middle of a range. There are no sellers there. You need to go where the sellers are hiding. So the data points for these time maps are three things: previous day high low, weekly high low, and monthly high low. In today's video, we'll be focusing on a day trader's time maps. Now let's go into the charts. So before I jump on to examples, I want to show you a flowchart that will help you stay out of markets that have not hit the area of interest. It will also help you figure out how do you trade when the price actually hits the time map that we are talking about. So the beginning is, has the price hit a time map? And what is a time map here? It's either a previous day high, previous day low, weekly high, or weekly low. So you ask yourself, has the price hit a time map? If the answer is no, that means this is the level. Price is here, it goes and it returns without hitting the time map. There will be no trade. Okay. What happens when the price has hit a time map? So this is the time map. So this is our time map. Okay, so price here has hit the time map. In this case, what do? Then you ask yourself the other question: did we consolidate just before the time map? In case something like this happened where we consolidated before we hitting the time map, what you want the price to do for you to be able to take a trade would be to trade the false breakout. Okay, so price consolidates, breaks out, then closes right back in the next one or two candles, and then it consolidates again and you find the trade here. This will be your entry. Okay, so that is how you trade in case there is a consolidation before price hits the time map. But what happens in case price hits the time map and the price just goes like this? In that case, level has been invalidated. The time map is of no use to us in this case and we miss the trade. So what happens if we do not consolidate before the time map? So then you ask yourself whether there is a sharp V-shape reversal. So in case something like this happens, no consolidation just before the level, price is coming from far away, shoots up to the level, shoots up to our time map and just drops. In this case, we don't get a trade because for us, our strategy requires us to have a rounded reversal. Okay. So what happens if in case there is not a sharp reversal? Did price break through with a strong close? What happens is there is no price comes here and it just keeps going. In that case, we don't get a trade and we are okay with that. You don't have to catch every move. But what happens when there is not a strong close? When there is not a strong close, you trade the rounded reversal. Level will flip. So let's say at first this level, let's say this is the previous day high. Okay, this is the previous day high. This is our time map. And price before going to that point, it acted as a resistance. Okay, once the price reached that point and there is a weak close above, price this level will now start to act as support. So the level will flip. So what you would do is you will trade the reversal from this support. So from this level, okay, this is like a rounded reversal and you will find your entry here. You can use chart patterns or candlestick patterns like a pin bar or an engulfing candle to find your entry. Alright, so that is our entire flowchart of how to decide what you are going to do. I'll link a PDF down below so you can refer it and then use it every time you are looking for a trade near a time map. Now let's look at some examples based on the flow chart we just discussed. I'll show you a few different scenarios. So today was Monday. So based on that, the last week high would be this one. This will be the last week high, so previous week high, PWH. Let's also mark the previous day high. Now price opens somewhere around here and it's approaching the previous day high and the previous week high. So you go to the 15-minute and here, as you can see, this is the previous day high. Price opens, closes above with an impulse candle. Now in this case we did not have any consolidation, so we are looking for some action that tells us that there is a possibility of a rounded reversal. So we are looking for something like this. Okay, so price moves and the price has, okay, so at this point it looks as if we are forming a rounded reversal, but look at what happens in the next candle. It just blasts through. So this level for us is invalidated. This level, this previous day high, this time map now doesn't matter for us, so we remove that, remove this drawing as well. Now let's look at how price approaches the previous week high. Impulse candle blasts through the level, no consolidation. We need more than this one. This is not a consolidation. Blasts through, tries to take support, signs of a rounded reversal, but we need more candles. Blasts through, then slowly moves up. Okay, so we found no trade at the previous week high as well. So I wanted to show you this example specifically because I wanted you to understand that you will not find a trade every day, right? That is the gist of it. You had one time map. You had one time map here. You had another time map here, but you did not find a single trade, and that is a very common occurrence. But the important part is that you don't need to find a trade every day. Okay. On 15th of December, this was the day low. Okay, let's mark that as the previous day low, and this was the previous day high. When this day opened on Tuesday, price started to consolidate a bit, consolidate, and then it dropped. Okay, so now since we consolidated and dropped, you need the price to come back in and look for, but you can also see that price started to reject off of this level. So price started to reject off this previous day low, forming something of a rounded reversal. So let me show you. So this is the level. Price sort of started doing this. Okay, this is what the price started to do, and then we put in a pin bar here. Okay, this one, and then we consolidated for a while and shot up. And if you look closely, this resembles a head and shoulders. So you could enter somewhere on the head of this pin bar. This could be your entry. So you could enter here and you could target this level. So okay, now let's look at a different type of example. This is the previous day high, this is the previous day low. Now let's jump on to 15-minute and see what's happening. So when this day opened, so this is the previous day low, this is the previous day high. So we open around here. Okay, consolidate, we consolidate. This is the best case scenario. Whenever there is a lot of consolidation just before a time map, you could sense that there could be a false break. There's not always going to be a false break, but whenever there is a false break after a lot of consolidation, that means there's a lot of trap traders, and that means that the trade would be a very good one. So okay, then a lot of consolidation, then we drop, and the next candle we immediately close in. That means the break is a false one. Now we're looking for an entry. How would I enter here? Would be the three drives pattern. The three drives pattern is basically when there is a level. So there's a level and price makes like 3 attempts to break through before falling. Okay, so 1, 2, 3. In the same way here, 1, we have 2, and we have 3. 3 attempts, and then we put in a pin bar, and then we shoot up. So these are like 3 different examples of the type of trade I'm talking about, and all of these trades follow the same flow chart that I showed you. All of the trades fall into one of the 5, 6 if then statements that I showed you. Keep that open on one tab, keep your charts open on one tab, and try to find trades for crude oil, gold, and Nasdaq, and you'll have some sort of value to gain from it.